And welcome to Who Moved the Market? Mangalam, is the market moving at all? That's my first question.
The market is moving in multiple directions, but actually not going anywhere.
Not going anywhere, right? Which is why we today have for you the real mover of the market. The mover of the market, not today, not this year, but over the last year as well. The stock in question is ITC, which is why we've rounded up Mangalam to tell us what's going on. First of all, the headlines, and this one, never ceases to amaze you. What the stock has done over the last, and all the memes, Mangalam, I remember all the memes. ITC came out and silenced a lot of those, jokes and the people who were making those jokes. Lifetime highs today, all-time highs, 389. Today it hit, I think,
394 as we speak, closing in on that 400 quadruple century Brian Lara mark on ITC. And speaking about Brian Lara, we talk about cricket, etc. There's this old cricket saying which says, let your bat do the talking. In ITC, I'm not talking about the bat that holds shares in ITC, but I'm talking about the performance. The performance.
British American Tobacco. Bat. British American Tobacco.
All right, I'm sorry. Not about the shareholders. The performance. 82% in the last 12 months or so. The only sole man standing, so to say, doing extremely well in the markets. After doing nothing for the last, 6-7 years, we've been talking about, how ITC was between that 200-250 zone. Every time the Nifty was 14,000, 15,000, 16,000. 17,000, 18,000. Then the Nifty is still at 18,000 and ITC is the one which is moved 200, 300 and now closer to 400.
Yeah, absolutely. But there was that period just after the lockdowns. I remember I was looking at an old chart between 160 to 220, 230 doing absolutely nothing. Then February of 22, something happened. We'll discuss that as we go along. But I want to start with the immediate here and now.
Yeah.
What we saw in the third quarter. You tell us what were the biggest takeaways for you, because the stock has been flying ever since.
The stock has been flying ever since in the third quarter, primarily on account of a couple of things. Usually for ITC, the third quarter also coincides with the budget time, the results and the budget. So you don't know what moved the stock more. Was it the results or was it the announcement that came in the budget? So let's talk about each of the things separately. The results. The results were a blowout performance. They were telling you one thing, that the stock or the company is firing on all cylinders. Why is that? The cigarette volumes, which were expected to be low teens or maybe anywhere between 9 to 11%, that actually grew 15 to 17%. That is the cash driver of the company. The FMCG business, everyone thought that margins are going to be under pressure primarily because there is inflation, etc. Not only that, the company has gone ahead and expanded margins. So that's a positive. They've grown their revenues. It's an 18,000 crore FMCG business now, which is larger than even Britannia.
That's commendable. That's saying a lot here.
Exactly. The third wheel of the company, which was the hotels business. We've been talking about hotels, the occupancies.
We've all contributed in some way, shape or form.
The average revenue, etc. And for hotels, the thing is that, it's a high fixed cost business. But once you cross that fixed cost threshold, everything that you get is profits. So the hotel business margins were 20%, so it's firing on those cylinders. Then it has the paper business, which is doing well, agri trading. It's firing on all cylinders.
There's a lot to talk about. This company has a lot of businesses. Okay, I'm going to start with cigarettes first because, as you said, that's the cash cow. And actually, we went into the budget almost, holding our breath, saying there's going to be a duty hike. They've not done it for 3 years. This time around, there's going to be a hit for ITC. There wasn't one, right? So tell us more about it, because the cigarettes business is also growing at these huge 17% kind of volumes in the third quarter. What's the outlook? What are people saying?
So 17% in the third quarter, if you look at it from on a compounded basis for the last 3 years, because also the same time last year the base was a little favorable, people weren't moving out, etc. Cigarette is also an out-of-home product, right? So when mobility increasing, the consumption of that product increases. You have more people smoking outside on the roads than smoking inside of their houses for whatever reason.
I didn't think of it that way, but it makes sense now that you say it.
So the volumes grew on a favorable base, but over the last 3 years or so itself, the volumes have compounded at a slightly higher than mid-single digit sort of rate. The reason why the street was anticipating a hike in taxes is, like you said, because 3 years the taxes weren't increased. The government did go ahead and increase the taxes, but not as much as the street was fearing. Why is that? And that, I think, was one of the most prudent moves that the government did, because every time the taxes on legal tobacco industry are increased, not only do you see a hit in the volumes of legal players, you also begin to start seeing a hit in the revenues of the government. That's a very economic concept called the Laffer curve, where what happens is that if the rate of taxes increases, the revenue of the government increases as well. But only up till a point. Thereafter, if the tax rate increases,
then it becomes prohibitive.
It becomes prohibitive, and it enables the illegal industry to come back as well. So as a result of which, while the tax rate increases, the revenue of the government comes down.
Because people simply shift to the...
They shift or move out of the tax net.
Yeah.
So the government had to navigate through that as well. So a lesser tax increase would mean that their coffers would increase because the ITC volumes would grow, but at the same time, they would not make it so prohibitive that the legal industry...
Just remind us, how much was this very minuscule tax increase, which obviously was
so
not even worth remembering, but still
there are
just tell us.
multiple taxes levied on tobacco. One of the components is called National Calamity Contingent Duty, which was increased by 16%. It amounts to about 1.5% in overall taxes that ITC has. So maybe, 1.5%, 2%, which is negligible on a 17-18 rupees section.
Nothing that can really dampen, the consumer sentiment or really...
Not only the consumer sentiment, I think this is something that the company will obviously not even pass on to the consumers because they have the margins in the tobacco business. So they'll just take it. So
that's tobacco and that's doing really well. Now let's move to FMCG, and that frankly is of a huge interest to me. I'm not a consumer.
Neither am I, and neither do we propagate anyone should consume that.
Tobacco products.
Tobacco products or tobacco smoking, it kills.
But FMCG, it's been really a study, right? Just from a consumer perspective, the way they've built these brands, Fiamma, and a lot of these names have become household staples now. Literally, they have. And you mentioned margin expansion. They did really well in the consumer business. What's happening here? Is it sustainable? What do we expect? Because it's a very competitive field as well when you're talking about these products, right?
It is an extremely competitive field, but you look at Britannia's margin, 16%. ITC's margin, 7-8%. So there is room for improvement out there. Why are ITC's margins improving now? Because up until now, the company was... all the work that the company was doing was beneath the surface. They were increasing their distribution presence. More importantly, they were increasing their manufacturing prowess. They were, linking themselves to farmers, etc., which is why wheat inflation did not hit them as much as it would have hit some other of the companies. And at the same time, they were working at the back end. It's like a bamboo tree, right? It takes 5 years for the bamboo tree to grow in its roots and just 6 months to go up in, multiple feet. So the FMCG business, before you know it, has become an 18,000 crore business. Margins have been expanding because of their backward integration, and now operating leverage is kicking in as well. Operating leverage basically means... We hear this a lot from the analyst fraternity. Operating leverage simply is a function of fixed costs and your revenue. So if you are spending 10 rupees and your revenue is 12 rupees, you're making 2 rupees profit. Absolutely. Because your fixed cost is not increasing in proportion to the revenue. Now, if this revenue becomes 20 rupees, your fixed cost is still 10 rupees. And that's where the kicker comes in. That's where the kicker comes in. So that's how operating leverage is. So I'm going to, toss in an out of syllabus question because we didn't, talk about lever at all. But I'm just curious, even roughly speaking, so if you do an apple to apple, Britannia is still a different company. It's a foods company. But ITC is a foods company. Actually, ITC's majority of ITC's FMCG revenue actually comes in from food and food products and not from the Fiamma which I'm fixated on. That you're fixated on. Most of it is Ashirwad, there is Sunfeast, there are Kitchens of India, and don't forget the classmate notebooks. Those came back as well because schools open too. That is true. You've actually, I'm not going to ask my question. I was going to ask you about levers, Levers sells detergent and all of that and stuff. ITC has none of that. That's not a fair comparison. Fair enough. Okay. So we've done cigarettes, we've done FMCG. I just want to quickly, jog people's memory back to what was happening. We spoke about this lull phase that this stock was in. It just couldn't break out. I mean, that Utja, Anarkali and all of those memes I still remember. So, Mangalam, what changed for ITC? Did they start doing something different, or is it just the market finally realized that here is probably a great stock, a cheap stock, let's go out and buy it? It was a combination of a lot of factors. The first one is that they were doing things which weren't visible and they suddenly started to get visible. Secondly, what happened was that, just before ITC started to rally, there was this massive exodus of FIIs and institutional flows from ITC and all the other companies as well, citing ESG. Post-tobacco and the ESG issues. So everyone realized that, okay, maybe this ESG issue is now overdone. So somewhere around March 2022, that's last year, we saw the FII shareholding bottoming out. Thereafter, we saw the FII shareholding come up. And as a result of which, there was no incremental selling. Once there is no incremental selling, you don't have to, convince people to go ahead and buy because valuations for ITC always cheap. At that time was trading around 13-14 times 1 year forward earnings. Imagine as against someone else trading at upwards of 40, 50, some 60 as well. The third thing that happened was while all the other FMCG companies which had sold a lot of things during the COVID period were getting into period of a high base. So their growth would look relatively lower. Whereas ITC was going into a period where the base was extremely low. Hotels, no one was going. Cigarette, not a lot of people were smoking. If you look at their paper business, it was largely shut. Agri trading, largely shut.
So they had the low base benefit.
They had the low base benefit, low valuation, no people selling in the in the markets. And then the fourth big trigger came in, which was the government not changing taxes, and they came up with a realistic target of disinvestment. ITC, the big regulatory overhang is the government's arm Suti selling stake in the company.
Right.
They said that the disinvestment target in the last budget was pretty realistic. So people said, okay, maybe the government does not need to sell ITC stake to raise money. They were gaining more money via taxes than they were spending.
Yeah, and maybe by just staying invested, looking at the way the stocks move now.
Staying invested now. I mean, at that time they were sitting on a huge drawdown. And at the same time, the GST numbers were extremely high, 1.5 lakh per month, etc. So there was no case for increasing compensation cess as well. So it is as beautiful a scenario for ITC as it was last February for the stock to rally. And rally it did.
You're a cricket fan as well. Let me ask you, if I were to ask for an analogy, what would be an analogy where you see such a beautiful coming together of confluence of circumstances that create something magical?
I think it would be very close to the 2011 World Cup. I mean, Sachin Tendulkar's last game happening at Wankhede, Dhoni hitting that 6, India versus Sri Lanka finals. It was that confluence.
I can't believe you're equating that moment with ITC, but sure, we get it. I mean, you're passionate about both, so...
Yeah, and at the same time, when in the 90s, no one played, Sachin played. If you look at it the last 12 months, no one else played, but ITC played.
Okay, so we've discussed the past, we've discussed the present. A quick glance maybe into the future. Triggers, we didn't discuss the agricultural business. How significant? Because I know that's where in the third quarter they were a little soft. I think the revenue was actually down a little bit.
Okay.
Is there a point to worry?
Nothing really to worry, because at the same time last year the government had allowed exports of wheat, and ITC took that as an opportunity, went ahead and exported a lot. Wheat prices were extremely high. This time it was coming off a high base. The government had banned exports of wheat, which is why they didn't get as many trading opportunities. So it's a trading business. Not much to be looked into.
Okay, so then triggers now as we look ahead.
Triggers, three things we have to watch out for. One is continued growth in all verticals. Now that they've shown growth so far, they will enter a period of high base. So will they be able to grow at a reasonable level in all these verticals or not? Secondly, they've been talking about demergers since forever. Every time Sanjeev Puri says the demerger is back on the table, it's back on the table. I want to know, when does it go off the table, and it actually happens, right? So those are one thing, some of the things that we'll be watching out for. And the third thing is a risk which always stays on ITC, which is the regulatory environment. You don't know, tomorrow something comes by, someone says that,
cigarettes are a bad thing, whatever.
They are a bad thing. I mean, but business of cigarettes is bad, increased taxes, government wishes to sell, something or the other happens. So there are too many moving parts. That's what always hangs on ITC, which is why despite rising so much, the valuation is still at a discount to all the other companies.
Well, it's been a beautiful rise, the proverbial phoenix rising from the ashes, so to speak.
I would say the cigarette rising from the ashes.
Actually, I forget the phoenix. I didn't think of that, but okay, never mind. But before we wrap up, I'm just curious. I was looking at the price targets on the street. Goldman Sachs is at 450. I think BNP I saw is at 425. Who's the biggest bull on ITC right now?
Everyone is a bull on ITC, and I'll be very honest, with all due respect to all the analysts, they've been chasing the price more than anything else, because I looked at a brokerage as well, say Nuvama, which is erstwhile Edelweiss. Same time last year they had a target price of 230 on this stock. Then now, as the stock moved higher, they increased it to 285, and now they have a target of around 450. So I mean, yes, everyone chases the performance, so we don't know where it stops. Currently it's trading at 22 times 1 year forward earnings, which is still a reasonable discount. Let's see whether stock's fundamental performance now stops, or does it stabilize. Only then we'll have a sense of where price targets will stabilize. Until then, when it's moving, they say, right, jalti cigarette ko koi nahi chhodta hai. And that's not me. That's Rakesh Jhunjhunwala saying.
Those are great words. All I know in my 17-18 years in the market is that the price decides the narrative more often than not. But Mangalam, thank you very much. That was an entertaining, educating and a very interesting conversation, and that's the ITC story for you. Well, hope you've had some great insights from this conversation. Keep watching us every day 2 p.m. We have a new theme for you I'm going to catch you probably next week or maybe the week after. He also tracks a lot of these consumer companies, the high profile, the Zomatos of the world, which we all want to know more about.
So while we're talking about ITC, you can munch on the bingo chips and watch this video. But when we talk about Zomato, Swiggy, or any of all these companies, maybe order in from those. We'll tell you in advance so that you can order and then eat and watch.
Maybe order, some cosmetics and Nykaa and stuff like that. Okay, forget it. We have to go. We really need to go. Thank you so much for watching. Comments, feedback, queries, ideas, all of that welcome. Keep writing into us at CNBC-TV18 News.